And we are live. Very well, welcome everyone. I have two wonderful guests here today. First, on the top right, we have Stefan Kyora, the editor-in-chief at startupticker.ch. And our second guest is Thomas Heimann, the deputy general secretary at SECA. Both together are the authors of the Swiss Venture Capital Report, which just came out earlier this month with its latest edition. Stefan, Thomas, very well welcome and thank you for being here today.
Yeah, thanks for inviting us.
Thank you.
So, new year, new Swiss Venture Capital Report. Of course, we want to take a look behind the numbers, but before we go there, what have you two been up to? Maybe let's start with you, Thomas. What's new? What has happened since we last spoke about a year ago?
Thank you, Silvan. A lot happened since then. So we are very much involved in the contribution to the Swiss VC ecosystem at SECA, where I'm the general secretary and chair of the venture capital chapter. So together with Stefan, we published the venture capital report, the semi-annual and annual report, and I'm also involved in the work related to the fund initiative at Deep Tech Nation Foundation, which I think is one of the important pillars that we can move this ecosystem forward again, and with a fund focused on scale-ups, growth investments. What we need for Switzerland, and also institutional investors will then have a source to invest into high growing startups.
So you've been busy, and the numbers also clearly show that we need more power, more firing power with more funds there. Stefan, what have you been up to over the past year?
Yeah, hiking, reading good books, and so on. No, I mean, regarding the work, what might be interesting is that we are publishing more and more database analysis. So, for example, for the first time, we published an analysis of liquidations of Swiss startups last year. So to show how the failure rate is, and it is lower than most people think, so below 20% after 10 years. And we will publish more and more of this stuff in the future. And some results can be already also seen at the moment at the new website of the Deep Tech Nation Foundation. I'm also involved there very much.
Amazing. So let's talk about the latest numbers. The Swiss Venture Capital Report 2025 just came out a few weeks ago, and there we saw a decrease of 8.5% in funding rounds. Why did this happen? What contributed to this decline? We thought maybe after the COVID shock we are over it, but it seems to still continue to decrease. So Stefan, what contributed to this decrease?
Yeah, I mean, if you look a little bit at the longer development and also compare it to other countries, you see that the number of financing rounds in Switzerland increased very strongly and much stronger than in other countries. And that's not 10% stronger. We compared the number of funding rounds between 2014 to 2024 to Europe as a whole, and the number of funding rounds in Switzerland grew 2 times faster. So this is really a high growth. And I think what we see at the moment is a little bit a consolidation that we see, I think, more that companies that are not really VC cases, so that are not growing strongly enough, that are addressing very small niche markets, that they don't find investors anymore. And I think that's okay for smaller companies. There will be always a way to bootstrap. And I think this is a consolidation. This is, what has to be accepted and expected, and this is a normal situation, I think, given the strong growth in the years before.
So if I hear you correctly, it's also healthy for an ecosystem to maybe stop financing non-VC cases in that sense?
Yeah, this ecosystem perspective is always not so funny then for the founders, of course. I
Of
mean,
course.
but yes, in general, I think so. It's also showing that the ecosystem as a whole is evolving. So this is really a trend that we see. Yeah.
Yeah. Thomas, over to you. Stefan already mentioned that Switzerland overall is doing good, but we also saw this 15% drop in total funds invested in Switzerland in last year, but we're still above average compared to other European countries or the European average. What makes Switzerland more resilient compared to our European counterparts?
That's a good thing. I think, or we talked about already about deep tech. So we are very famous for deep tech companies in Switzerland, B2B businesses, less consumer-driven businesses. And we already saw that in the latest numbers that the share increased again, the share to investments into these deep tech companies, such as from clean tech, micro, nano, robotics, drones. So it's heavy, a lot of activities there. And it seems that, we can offer what investors are looking for. It's solid business models, strong IP, and capital efficiency. Also, Stefan mentioned it. It's bootstrapping, etc. It's very important at the moment. Fund sources or the funds are a little bit limited. So it's important that you focus on your business model.
So we see deep tech is the new sort of kid on the block, or the strong kid on the block. On the other hand, we have fintech and also ICT, and they had huge declines. Fintech minus 32% and ICT minus 19% last year. Why did this happen, Stefan? Did the investors lose appetite in these sectors?
Yeah, obviously. I mean, this is clear. I think the root cause here is still that we all understood now that not only deep tech is time consuming and requires a lot of money, but also digitization and digitization in particular in sectors that are highly regulated and where the traditional players are not innovation driven. So insurance companies, banks, they are not driven by innovation. Of course, everything has to be up to date technically, but it's not their central success factor. And this makes it a little bit more complicated bringing innovative products to the market for such companies. And I think more complicated than everybody expected 2 or 3 years ago within this digitization euphoria during the COVID crisis. Yeah, and I think really the core, the root cause here is the market, so that banks, insurance companies, other companies buying from startups are more skeptical than 2 or 3 years ago, and then the investment is simply following that.
That makes a ton of sense. On the other hand, Thomas, we see biotech, deep tech really withstanding this declining pressure. So they were able to still raise a very decent amount of funding last year. What made these sectors more attractive to investors?
It's maybe the same reason what we talked about, the deep technology. In the end, biotech and clean tech are where we can count that as deep technology sectors. Biotech has a strong origin in Switzerland, as always. 400 to 700 million every year will be invested in this sector. The largest rounds this year, again, or the 4 of top 5 for biotech companies. So it's very important, and then we will see also a lot of activities when it comes to licensing, when it comes to M&As. So last year we had also M&As in biotech, And the same probably is a little bit true for clean tech. It's also capital intensive. Last year we saw also large rounds there, and it's also astonishing when we look back only in 2018, 2017, we had only a couple of millions invested into clean tech, and now it's one of the driving forces of our ecosystem. So we expect that this will continue, but as Stefan said before, it takes time, and it's not done overnight, right?
And it's also a bit lapsing time, right, between political things that happen and then the investments follow. This takes a bit time. Now, recently, with the change in the US political landscape, we also see maybe a change on clean tech investments as well. Do you think that this will potentially impact the funding on clean tech specifically over the next few months and years to come?
I think it could have an impact, but probably not that much, because in the end we need renewable sources. We have the issues are there, and we need new efficient solutions. And it could be a little bit backdrop, but it's not that, or we think it will continue. And despite the challenges in the US, and you never know what's going to materialize there. It's always difficult. There are a lot of topics now around us, and let's see what the administration will bring forward or not, right?
The challenges are too big to ignore, no matter who is in political power, basically. Stefan, I also want to talk about geographies. Zurich and Zug saw declines in terms of how much funding they got in their regions. But on the other hand, we had Vaud and Geneva really leveling up. Do you think that the French-speaking part of Switzerland could potentially even take over the leader position from the German-speaking part at one point?
Yeah, I mean, let me first say what I always say when I get questions like that. You know what I will say. Yeah.
I remember from last year.
Yeah. So what is relevant is for us and also for regions in Switzerland is our benchmarks like Boston area or Cambridge or Munich, and not the village on the other side of the river. So this is not the correct benchmark. But to answer your question, I mean. I think what is encouraging that we see a long time upward trend in several cantons, and this includes, for example, Geneva. They are doing quite a lot there also to support this upward trend, but also in other cantons. So we had a new record for Bern also. And I think this is quite good. The Swiss ecosystem is quite diversified when it comes to the region, and this will stay, I think. And if then also this small regional ecosystems also thrive, this is good for everybody. And regarding the differences last year, I think the main factor there are the different sectors that are relevant for the different cantons. So Vaud is quite diversified in sectors, but has very few fintech companies, and that helped obviously last year. Zug has fintech companies, but has also from time to time very large financing rounds of startups that have been founded from international teams that select Zug as a headquarter. We did not have such a big round last year, so this is then also resulting in a lower invested amount. And Zurich, I think this was also a little bit, it's also always a little bit a question of timing and luck, because Zurich has quite a lot of biotech companies, for example, clean tech companies, and that there was no larger round. I mean, this will for sure come again this year in 25.
Absolutely. Thomas, Stefan said the benchmark should be the international comparison, not Switzerland within itself. And if we look internationally, we also obviously look at international investors. So why are foreign investors also still very relevant for the Swiss ecosystem? I think they also played a big role last year in making investments in Swiss companies, right?
Yeah, that's true. I mean, according to the latest numbers, we had in 9 of the top 20 rounds, we had Swiss investors involved. That means also in 11 of the rounds, the rounds were dominated by foreign investors, and foreign investors play an important role when it comes to later stage rounds, growth financing. It's still 25% is only coming from 20 to 25 from Swiss investors. But it's not uncommon. It was still the case in the past and also last year. And I think it must not be, it's not a weakness of the system. It was a stabilizing factor last year. The high share of foreign investors, it could be a little bit a problem when it comes to earlier stage rounds, when money is not that available. You need always local investors first to grow the company, and then to enter into the scale-up phase, and then probably you can combine it with foreign investors as well. So I would also recommend to have a look at the latest radar published by Startup Ticker. You can also see how this percentage developed over time. So I would say it would be good to have more also Swiss domiciled investors in the future. So that's the reason why we are working actively or over a long time for and would like to have this fund with several couple of 100 millions sustainable fund source, because we need it. There is still a bottleneck between this 20 million, but yeah, we need both. We cannot say we need only the domestic, we need also the foreign investors, and together I think there is a good match.
Stefan, a follow-up question on this topic. We always say, okay, early stage funding, we do get startups funded in Switzerland, but the devil lays later in the valley of death when you want to grow the company, and it's more and more difficult to really raise money as a Swiss company, especially from Swiss investors, to finance your growth. It is a bit like a double-edged sword, right? On one hand, you want to have foreign investors investing in these Swiss companies so we can keep growing them. But then if that happens, also a big part of the potential upside will go abroad and might not be invested in the Swiss ecosystem again. So how do you see that? It seems we will continue to sort of remain dependent on foreign investors for the Swiss ecosystem. But at the same time, we also should try, and I know there are initiatives, you guys are also working on that, to get more Swiss investors financing growth rounds. How do you see this double-edged sword? Is it always a combination of both, or should we focus more on one or the other?
Yeah, maybe let me first talk a little bit about this growth funding gap. Again, Thomas mentioned it already. So we look, of course, very deeply into the numbers that we have, and often I hear people saying that that Switzerland is good for raising 1 or 2 million, but then it is getting hard, and this is not exactly true. So if you compare the number of rounds below 100 million, but growth rounds of more than 10 million, so the range between 10 and 50 million or 50 and 100 million, Switzerland is performing quite well compared to other European countries. So there's a lot happening. However, given the fact of the high number of funding rounds or high number of funded startups, I mentioned this earlier, also in this in this range of 10 to 100 million, there's still potential, but there we are already quite good. And the problem really are the numbers that are higher, so rounds of 100 million and more. So last year we had only one. And these are the rounds that then really moves the needle for the total invested capital. So we have on the one hand to work on this rounds between 20 to 100 million because there is additional potential. There are more cases in which we could invest. But the more burning issue are these mega rounds of more than 100 million. And this, of course, then means regarding the funds. So there is Thomas more the expert. Maybe he will then add to this that you really have to have huge funds that have maybe 1 billion or even more under management. And as the VC funds here in Switzerland are very, very young, it's not possible for them to reach this high amount of capital under management that is necessary for taking part in this huge round. So the next step, I think, if we say the more urgent problem are these mega rounds, so there's only one way, and this means bringing more capital from abroad into the Swiss startup ecosystem. And then of course we have also to work on this VC ecosystem here in Switzerland as Thomas is doing that. So the next step, as I said, it would be more important for me to really bring in the big guys, and they have all invested. So we have had investors of the top VCs of Atomicos and Sequoias and Google Ventures. They are here, but we need more of that.
So if I understand you correctly, it's first about getting the money for these mega rounds, no matter where it comes from, and then we can think about everything else. This is the most pressing issue to solve.
I would say so. And I mean, we also see over the years now that more and more Swiss investors then taking part in these mega rounds or larger rounds. This is the normal evolution, and then you have a better network, and then it is easier to convince as a VC fund to convince then your investors to give you money, because you are able also to invest with top VC funds globally. I think this would be the normal next step. Yeah.
Got it. It's a bit like a compounding interest effect. It takes time to fully materialize. Thomas, we look at the data that you put in the report. There are in Switzerland currently 46 funds that are open and fundraising. Will they be able to address parts of these gaps in the mega rounds of 100 plus million, or are they still just too small? Because that's probably for some even almost or really the full fund size that they raise.
Yeah, it's a very surprising result that we still have 46 funds in fundraising for a small country as Switzerland is in the end, compared to our neighbors. So it's still a lot of is ongoing when it comes to fundraising. But as you mentioned before, the fund sizes are still too small. It's on average between 30 to 50 million. And so they are very active when it comes to earlier stage seed rounds. So there we have a very good basis. But for the later stage rounds, for the scale-up growth phase, there's still a lack of larger funds. But I think it's also not surprising that because 2/3 or even more, 75%, did not exist 10 years ago of this fund. So the vintage year or the foundation was in 2018, 2019 only. So So they need to earn track record. They need to raise their second, third, fourth fund. But this will take time again. But on the other side, you can say, investors has now a pool of attractive opportunities. So they have definitely to look at it at the moment. And you know, in the end, Switzerland is home to several of the largest institutional managers, and that we should not forget. So we have the fund of fund managers, we have the wealth managers here in Switzerland, the largest ones with high quality. And at the moment, most of their activity is in the US or in Asia. So we have to rethink a little bit the model, and we are working on this hardly. And I hope, and I'm convinced that we will see larger funds in the future if we have also this possibility with this multi-manager fund platform together with Deep Tech Nation. So then there is a source, and we can then do a pooling and make a bigger fund where also institutional investors such as pension funds, family office can then easily invest a certain amount into a fund with 500, 600, 700 million fund size, and that would then be possible. But that's the same as the European Investment Fund did in the past. They always supported, or the best example is Atomico. They supported this from the beginning. When the first generation fund was raised, EIF was there, and they are still invested in the now, I guess, in the 7th, 8th fund. So that's how you should do it. And I think the examples are here, and we do not have to reinvent the whole wheel. So we have to, we have to look what our neighbors did in the past and maybe do our own. Not copy only. We should do it the Swiss way, I would say.
I love that. And one important thing, or probably the strongest message you can send, are exits, Stefan. So let's also quickly talk about exits, because more exits, great exits, attract more investors, obviously, because then you deliver a return. There were no IPOs in 2024, but there were some notable acquisitions like 7 Sense, Calypso Biotech, etc. What do these acquisitions reveal about the strengths of the Swiss startups and also their appeal to local but also global buyers?
Yeah, I mean, firstly, what is remarkable when you look at the companies you just mentioned is that they are completely different. So they're coming from different sectors. They have different backgrounds. They are biotech, ICT. ICT for industrial applications like 7 Sense. So this is in a way robotics, although it's a software company. And I mean, this shows how broad the Swiss startup ecosystem is, and that we are able to build up very successful companies in all of these sectors. So that is, I think, very encouraging. I think it's also what was also remarkable last year is that 2 of the buyers of the companies that you just mentioned are coming from Switzerland. So one was Novartis buying a biotech company, and the other one was ABB buying 7 Sense. And I think there's also potential if you look at the Swiss corporates. Of course, they are very globalized. They are looking at innovation and looking for innovative companies everywhere in the world. But I think there's also some potential if they would look a little bit more closer in their home country. There would be more partnerships between those larger companies in Switzerland and startups, and that in the end would then also lead to more exits.
That makes a lot of sense. And I wonder, Thomas, so we have the great technology, right? We have potential buyers in, but also outside of Switzerland. What else can we do to have more exits, including IPO in 2025 and beyond? Because this seems to be really important to attract more investors and bring all the levels up.
Yeah, sure. I would say exits is the name of the game at the moment. We will have to see more exits over the next 18 to 24 months because, the proceeds will be reinvested into new startups, into new ventures, into new funds we talked about. So liquidity events are very important, and we did not yet see or a reacceleration in IPOs, but that's also the case in the past. That the dual path of M&A and exits is not yet there, and that's also a little bit the challenge here. On the other side, it also not make sense to do a listing in Switzerland or in a European at the European exchange when you do not have only small liquidity after the IPO. So you need also, there are a lot of factors ongoing, and we are also discussing that with the Swiss exchange, what they should do and address. It's a high topic. It's not a topic of today only. So it's still there. You need all the post-IPO efforts and maybe a better coordination. Maybe we have the involvement of several stakeholders. Also, the banks should be more active than probably the pension fund. So it's not only one stakeholder. There are a couple of stakeholders. And in the US, you have the deep pockets. You have also the hedge funds. You have the crossover funds, which the large investors who then contribute to these larger rounds pre-IPO, in the IPO, and afterwards. And this is missing here in Switzerland and Europe. So it all comes. It's not always the capital. Capital is here, so it's where to spend the capital in the end. So it also then comes back to the question, to the challenge that we do not have the institution, or not yet the substantial amount of institutional money in our ecosystem. So. But yeah, we are working on it. There will be more, and exits. Probably we will also see more exits next year or the year after. When you compare, or when you look after our survey we did, then VC investors, as always, they are optimistic, but in this question they are more optimistic than even in the past. So they think that we will see more exits, and they invested heavily into startups because we had this many funds raised and did their first closing, and now they're ready to invest, and then probably, hopefully, they can also start soon to divest their assets.
Yeah, you sort of have to be an optimist, right? If you're in the VC or in the entrepreneur business. Stefan, Thomas mentioned 68% of the VCs that you surveyed expect more exits. Also, 62% of the VCs that you asked, they expect higher valuations in this coming year. Is that realistic given the current market conditions and circumstances?
Yeah, I think these are two aspects. So, I mean, regarding the investment activity and valuation, there it might be the case that the upswing will come simply because it comes. So, I mean, investors are very well known for their herd behavior, so they are looking very much what the other investors are doing. And if this just takes up, so if investment just takes up a little bit, then other investors will follow, and then we will see an upswing just because there is an upswing. So this I think is quite likely. I think money is never the problem. Money is there. That is the question is only in which kind of opportunities it is invested. Regarding the exits, Yeah, we will see. So on the one hand, we already had this IPO from Bioversus. I think this is a good signal, at least for everybody, for the whole ecosystem, including the Swiss exchange. What we see a little bit more at the moment are secondaries or private equity investors buying startups, or at least buying shares of VC investors. So one was happening this week with this investment of 75 million in room price Genie. So there was one investor who bought the shares from the Series A investors. This might also be happen because, as I said, money is there. That's not the problem. This might be a way we will see a little bit more. I'm not sure, but at the moment there's more happening than usual. Regarding exits, I mean, we spoke about the insecurities and the person in charge who is responsible for that. So, I mean, no one knows what the U.S. president is doing, and if everything is insecure, I think then established companies will not tend to buy startups with a lot of additional risk factors. But yeah, I might be wrong. This is just my personal opinion here.
Well, it makes a ton of sense what you just described. We have reached the end of my questions. There's only one last one left. And I wonder about your predictions for 2025. Thomas, let's start with you. What do you predict for the Swiss startup ecosystem in 2025?
It's always hard to predict something for 1 year. So I'm always a little bit looking ahead, but I can do it here as well. So I guess next year we will probably, or this year already, we will probably see a higher amount of money invested. I'm not yet sure if we will see the larger rounds, as Stefan mentioned, above 100 million. Maybe we'll see it because these rounds are heavily dependent from foreign investors. So and this takes time to raise these large amounts. But my highest hope, and that's for this year, is that we will see a similar distribution among financing rounds than we saw this year or last year. So we had a median of 3 million invested per round. It's a 50% plus compared to the year before. And so the startups received more money on average than ever. So I hope we will see a similar size. And we need, as we talked about also the larger rounds, we need also a highly diversified ecosystem. And that's Switzerland is famous for, and it's important that we even also can show the resilience we had in the past. And I'm quite optimistic, but probably it's not. It takes some time, and we will see more for sure more activities.
If you had to give a number, what will be the total funds invested in Swiss startups in 2025?
I can say I would say 15% plus. That would be 2.8 to 3 billion. Hope we will see the 3 billion mark soon. That would be my wish. Then we can announce it again. It's always good to say we have 3 billion, another billion, and maybe next year then 4 billion. Let's see.
Perfect. Stefan, what are your predictions, including a number of the total funds invested in 2025?
Yeah. So, I mean, as we sum this up here in a way, so I think it's, again, we spoke a lot about challenges and things where we can improve, but I think it's also important to say that the substance here in Switzerland is definitely here. We have a lot of very interesting cases in very different sectors, very different technologies. We have also very promising AI startups. We haven't mentioned that yet, but So there's a lot potential around, and what makes me optimistic is also that a lot of people, I think, understood already, at least in the ecosystem itself, that there is a lot of potential. So that what we have seen with this 2.4, 2.5 or something, even the 3 billion is not what we can do. We can do much more. And this goal of the Deep Tech Nation Switzerland Foundation saying we want to have 5 billion on average over 10 years, I think it sounds ambitious, but it's not really that ambitious. It's absolutely possible. And as I said, we are in a situation where a lot of people understand that there is this potential and working on different fields to realize this. So this could really help. And on the basis, of course, we have the projects, we have the startups, we have the founders that will make this possible. So as Thomas now said 3 would be good. I would say then 3.5 in 2025.
I like that. I would have gone with the same number, 3.5.
Okay.
You mentioned AI startups. Of course, we have a lot of great AI startups. Recently at the ETH Deep Tech Investor Summit, there were different pitches. And the area, the vertical of robotics, that one really blew me out of my socks. Like it was so good startups that were presenting there. So I think robotics is also one space to watch out for that I would like to add here.
Yeah, absolutely. You can, I mean, also robotics, we made an international comparison there. You will find also some insights there on this new Deep Tech Nation Switzerland website. The number of robotics startups is quite high in Switzerland, and not only if you take into account the size of the country, but also in absolute numbers. So this can be a strength. However, it's a very complicated market then that you have to enter. So antibiotics, they really needed years to get their foot into this market. So this takes time. But I think this is really a good example of what Switzerland can do. And in short, it means that every time it's getting really complicated from a technological perspective. So if you have hardware, you have motors, you have software, you have AI, you have sensors. So every time it's getting complicated, then we are very good at it in Switzerland.
We love to solve hard problems. I think that's wonderful. I encourage everyone to head over to the startupticket.ch website, and there under assets, you will find the latest Swiss Venture Capital report that you can download for free. Read it through. You find all the numbers that we just talked about right there. Thomas, Stefan, thank you so much, not only for being here today, but also for the very important and amazing work that you guys do to put out these numbers, the report every year. I think it's really great to have that and very valuable for the ecosystem. So thank you for that, and thank you for being here today.
Yeah, great. Thank you, Silvan.
Thank you, Silvan.
That's a wrap. Hope to see you again next year, and I wish everyone a wonderful rest of their day. Thank